If you're looking to purchase a property or do a refinance or anything that has to do with a home loan, it's important that you understand the terminology and the words that are being used by your loan officer or your bank or even your real estate agent or advertising on TV. So when you hear things like, a 4% interest rate with 2 points or a 6% interest rate with no points, or even things like loan to value ratio or debt ratio, down payment, cash to close, clear to close, all these different terms that are industry jargon. Well, if you don't understand what they mean, you may not be able to negotiate or really know the type of loan that you're getting into. So over the next few videos, I'm going to attempt to give you insight into the industry and understanding the jargon and the terminology that we use. My name is Brent Bruce, and I'm the president of Rancho Capital Home Loans, and I'm also the host of the Brent Bruce Daily. So I've been doing this for over 20 years now, and as I start talking about loan types and programs, oftentimes I have to remember to explain in detail what I mean when I'm talking to someone who just isn't in the industry. And I always like to think of it this way: whoever you are watching this video right now, I don't know what you do for a living, and I don't know the ins and outs of that. So if you're a mechanic, I may not know all the terminology about working on cars or constructing a home or whatever it is that you do. So it's important, though, that in this type of a transaction that you're going to be involved in with huge amounts of money, that you understand what we're talking about here so that you will be able to make decisions that are best for you and your family. So today, what we're going to talk about is points. Okay, so you will often hear, even in advertising, when you're watching, a commercial, they say, 4% interest rate with no points, or 2% interest rate with 3 points, or whatever. They're always talking about points. Okay, so what are points? How much is a point? How do you do the math on a point? Is it smart to pay points or not pay points? So we're going to talk a little bit about that here today, and hopefully you will understand more of what's going on, even with some of the marketing tactics that people sometimes use when they say things like no closing costs and things like that, and understanding how that plays a part into the points that we're going to discuss right now. So first of all, what is a point? Well, I'm going to pull this up here. Let me go over to this screen here. So kind of think of the definition of a point as a points is the cost or credit associated with a specific interest rate. Okay, so we're going to come back to that as I show you more. 1 point equals 1% of the loan amount. And I've underlined loan amount because it is not 1% of the purchase price. So if you're buying a $500,000 house, but you're putting $200,000 down, your loan amount is $300,000. So in this transaction, if you paid 1 point, you would be paying $3,000. Okay, so it's based on the loan amount, not the purchase price when it comes to a purchase transaction. Okay, so let's take a look now. I am going to pull up my screen here, and I'm going to show you the tools that I use to calculate the interest rate that you're going to pay. So I'm going to put in a scenario. It's going to show me the interest rates, and then I'm going to show you the points that are associated with that interest rate and how that works. So let me take a look here. I'm going to move over to a different screen. This is a tool that we use as mortgage brokers. I'm a broker, so I work with many different banks. If you call a major bank, a B of A, a Wells, a Chase, they have their loans. Like they say, hey, here's our 30-year fixed home loan. Here's our regular home loan. And that is the rate they offer. I work with multiple banks, so I have to find the best rate and product amongst all of the banks that I work with. That's how I shop for you as a broker. So I use a tool that does that for me. So I'm going to put a little bit of information in here. We were talking about a $500,000 purchase price in the scenario we discussed earlier with a $300,000 loan amount. So you're putting down $200,000. Let's say that your FICO score is pretty good. It's actually excellent. It's a 760. Now, these other items like term and amortization and debt ratio and all these things, we'll have to get into those at a different time. Primary residence means the house that you live in. So this is you're buying your own home. This is not an investment property or a second home or anything like that. It's not a condo, anything like that. Just a very basic transaction. And I'm going to go ahead and I'm going to put, let's put 90210. Okay. That is Beverly Hills. And this really doesn't matter too much for the topic that we're on either. So I'm going to run this information. It is now searching amongst all the banks that I do business with. Okay. So right here, these are all the names of different banks that I work with, okay? So United Wholesale Mortgage is now the nation's largest mortgage lender, bigger than Rocket Mortgage, bigger than B of A, bigger than Wells, bigger than anyone. And you really don't know that because they only work through brokerages like myself. But United Wholesale is being priced the best today, which is why it's at the top of the list. So right now, you can see that it's saying 6.375. So the scenario that we just ran here, if this was your scenario and you wanted a 30-year fixed loan, which is the basic home loan for buying a house, you would be thinking, okay, well, 6.375 is my interest rate. And you would probably be right, but you need to look further into this because are you paying extra for that interest rate? Or is that the interest rate with no extra costs? Are there closing costs? There's all of these details. Okay, so what I'm going to do is I'm going to click this button here, and it's going to open up all the rates that are available. So there's not just one rate available. As a matter of fact, all of these interest rates are available to this client. So for instance, again, if that was you, you're buying this $500,000 house, all of these are available to you today. Well, how does that work? I can get a 5.125? Well, you can, but you have to pay extra to get that rate. Okay, so there's basically three different kind of pricings that you want to be aware of. There is what's called the par rate. Okay, so par means like the steady, the base rate, the basic interest rate. And that's that 6.375 that came up here. So this is telling you that your interest rate would be 6.375, but I'm going to slide this way here. And this is where the people who are in the industry like myself are seeing kind of the back end of things. Okay, so the revenue, how much money is in that loan, how much money I'm going to get paid, all of that kind of stuff, and how much you're going to have to pay in order to get that interest rate, anything you have to pay extra. So for instance, if 6% was zero cost, you're not paying anything to get a 6% interest rate, but you wanted a 5.5%, you could probably pay extra to buy that 5.5%. That's called points. Okay. So in this scenario, the 6.375, there isn't really a zero, right? So this is when it says discount and it has a price, discount / rebate, and it has a price. This is the price for that interest rate. Now, if it is green, that actually is a credit. Okay, so in this case, as of today, if you went with a 6.375, we would give you a credit towards your closing costs to pay for the other things that are associated with buying a house, like taxes or insurance or title, or there's all these other things that we'll talk about another day, but we're giving you a credit of $1,329 with this interest rate of 6.375. Now, again, if you say, well, you know what, I really want a 5.5. Okay, well, we can give you a 5.5, but we're going to charge you, let's go on down the line, we're going to charge you $8,175 in order to get that interest rate with this scenario. Okay, so remember I told you that 1 point equals 1%, right? So like this line here is where it's not showing you the numbers in a dollar amount. It's showing the numbers in a percentage. You see that percentage sign? So when you see this 1.06, that is almost exactly 1%. So that would be 1 point, okay? So if you wanted to pay 1 point, I could get you a 5.875. You see, this again is a $300,000. Let me go up right here. This is a $300,000 loan amount. If you pay 1 point, which is 1%, it is costing $3,180 because it's that little 0.6 is giving you that additional $180. If this showed 1.000, then this would be exactly $3,000. Okay. So if someone says, okay, I'm offering a 5.5% interest rate today on this scenario, on this client, then you would say, well, how many points is that? Oh, well, I didn't really want to mention that, but it's going to cost 2.725 points. So it's going to be 2.725% of the loan amount, which if you do the math on a $300,000 loan, so let's go ahead and do that on our screen here. $300,000 times 0.02725, right? Just like that right there. 2.725% equals $8,175. Boom. There it is. Okay. So you can always do the math if someone tells you that something is going to cost 2 points or 3 points or 1.5 points. That's usually what they're going to say. They're not going to give you some exact number like 1.774. They're going to say about 1 3/4 points, right? Something like that. So you can begin to see how points work and what points are. It is a percentage of the loan amount. 2 points is 2% of the loan amount. And then you have to do the math. Now, why would we use that kind of a number? Because we don't know what your loan amount is. So if you call me and you say, well, how much is it going to cost to get a 5.5% interest rate? And I say, well, it's going to cost you $8,175. Well, that's only if your loan amount is exactly $300,000. If your loan amount is $200,000, or if it is $175,000 or $153,691, any amount, then I have to do the math on that to be able to tell you. But I could pretty consistently say it's going to cost 2.725 points. Okay, so that is what points are. It is a percent of the loan amount. And as you can see, you can buy other interest rates by paying points. And normally they're called discount points because you're discounting the interest rate. So that is how this works. Now, I also want to point out there's a bunch of green down here, right? So why would there be green? Well, it works in the other way as well. Okay, so you can choose a higher interest rate and actually get a larger credit. So look at these credits going up. Okay, so $3,045 in credit. So that's going to apply to the other costs of either refinancing or buying a home. So there's a bunch of different fees. You may have heard junk fees. Well, they're fees. Okay, so there's other people like the appraiser that appraises your house. He has to get paid. If you have a termite company come out and see if your property has termites, he has to get paid. There are all these different people that are involved in a purchase or refinance transaction. Now, normally, you're going to be charged those fees. So you're either going to pay them out of pocket, or sometimes we can roll them into your loan. Okay, so, but either way, you are paying those. Now, what some people do is they advertise, like let's say that your total costs, your fees was about $3,000. So all these different third parties combined, it's going to cost about $3,000 for you to refinance your loan, for instance. You're going to get a home loan to refinance your house. Well, that lender, a lender, can advertise, well, your interest rate is 6.375%, and your fees are, let's just say $3,000, right? Or they can go down here and they can advertise that your interest rate is 6.75% with no fees, with no closing costs, because they have a $3,000 credit to work with. So don't ever think that you're getting something for free. They're just giving you a higher interest rate in order to cover those other fees. Now, there's nothing wrong with that. It's not shady, but you wouldn't know these things if you don't learn it like we're doing here today. So you always want to look at everything. You want to look at all the fees, all the closing costs, and we'll talk about this in later time. The cost for the interest rate, are there points, all these different things. So hopefully this helps you understand, again, going back to our original little slide here, that points is the cost or the credit associated with an interest rate. The cost or the credit associated with an interest rate. All right. Now, the other portion here is 1 point equals 1% of the loan amount. So on a $300,000 loan, 1 point is $3,000. So if I said it's 2 points, how much would that be on a $300,000 loan? It would be $6,000, 2% of $300,000. Okay. So hopefully, again, that makes sense. Now, the other thing that I want to make sure, the last thing that I want to make sure that you're understanding is that all the numbers that we went over just now, all the numbers that we just went through are based on a specific scenario. Okay. So you cannot go out and say, hey, I heard that you can get a 6.375 interest rate with no points, or you get a credit, or I can get a 5.5% interest rate with about $5,000 in points. That is only today. That is only right now, and that is only on the exact scenario that we just went through. Okay, so you really need to make sure that you talk to, either give me a call or a broker like me, someone who is going to really look at your exact scenario in order to be able to tell you what your costs or points or fees will be. And remember, those can change not only every day, but believe it or not, they can even change during the day. So your points might be 1 point at 10 in the morning and 2 points, that kind of excessive, but let's just say 2 points at 4 in the afternoon, because the market changed. It's just like the stock market. It moves all the time. So just be aware that you need to make sure that the quote you're getting is accurate. If you're ever comparing two lenders, or two brokers, or a broker to a lender, you're comparing two companies that supply home loans, you need to get their quote on the same day. You cannot get a quote one day from one company and a quote another day from another company, because now you're not apples to apples. It's not the same. You have to get them almost at the same time in order to actually see which one is better. You can always reach out to me as well. My information, my contact information is in the email below. Click on the link. I'd be happy to talk to you. Make sure that you like, subscribe, and share. If this information was helpful for you at all, please click that like button and subscribe to this channel, because more will be coming out describing exactly how home loans and lending really works. Thanks for watching.